Nigeria's external reserves has fallen by $100 million in 3 days from June 26 to June 28, as the figures continue to witness historic depletion. According to data sourced from the Central Bank of Nigeria, the gross reserves have fallen to approximately $33.4 billion on June 28 against the $33.5 billion balance as of June 25, 2021. The liquid form also fell from an excess of $33.3 billion to $33.2 billion within 3 days, leading the country into a shortfall of over $100 billion. Now, the external reserve fell to a 14-month as of Monday. That's a 14-month low, and the figures have been on a reducing balance since last May 28. They appreciated briefly between May 26 and 28, after which they pulled back. Month on month now, the gross and liquid reserves have lost an average of $0.8 billion, while the gross figure, which comprises invested and liquid proportions, depreciated by $0.85 billion. The liquid form lost $0.77 billion. Looking at the foreign reserves now, this could lead the country's economic outlook to a worse off, as the confidence of foreign investors is partly influenced by the rise and size of the reserve. But is there any relief for Nigeria, and what could this mean for the naira against other currencies? Now, those are the issues that we will be taking a look at, even as we consider Nigeria losing $100 million in 3 days of its foreign reserve. Well, my name is Lekan Onabanjo. You're welcome. This is Business Edge. And joining me now is the head Brokerage Services Securities Trader at Comercio Partners. His name is Taiwo Adams. Many thanks, Taiwo, for joining us.
Thank you for having me, Lekan. It's a pleasure.
All right, so let's start this way now. Nigeria's external reserves fell by $100 million in 3 days from June 26 to 28. Now, according to data sourced from the Central Bank of Nigeria, as I said earlier, the gross reserves are falling by approximately $33.4 billion. That was on June 28 against $33.5 billion as of June 25 the same year. Now, is there any justification whatsoever? Is this a worrying trend?
Thank you, Lekan. I mean, definitely, yes, this is definitely a worrying trend. But I'll start with, the justification part of it. Yeah, it's safe to say that there is a justification for the decline. We have to first take a look at some of the key factors that have been responsible for this continuous decline in our external reserves. Our external reserves are at the lowest year to date. I mean, we started off the year around 36 billion. But when you continue to see this decline, largely due to the slow crude oil demand recovery that we've experienced due to the pandemic. As you know, Nigeria depends heavily on crude oil for its FX earnings. And also, if you recall last year, when the pandemic hit, it took crude oil to the all-time low, roughly below $20 per barrel. And definitely, this caused OPEC to step in and, cut a lot of production, which definitely affected earnings for liquid oil earnings for Nigeria as well. When you also take into the consideration that there was a Eurobond maturity earlier this year, which took out about 500 million sometime in January, and also continued CBN intervention in the FX market. And also, if you look at the sharp decline that we've experienced from the foreign inflows as well, I think all of this continues to explain why reserves are on a steady decline. And on the other part of the question, when you said, in terms of if this is a worrying trend, I think definitely is a worrying trend. I mean, when you see your external reserve, steadily declining for some time now, like as we said, those are the kind of indicators that you look at as foreign investors that, to play into if you want to go into a country. So, as we look at all these factors and we look at it and say, it's not like the COVID-19 is, pandemic disruption is out of the way yet. We still continue to watch out for that. So in the near term, we don't feel like all of these issues that are pointed out are going to be addressed, right away. So I think it's still a worrying trend. I mean, if you look at it, despite how crude oil as you know, crude oil prices have been on the rise. We're at a 3-year high now at $75 per barrel. You know, we've also seen an 83% jump year on year. You know, but you still see that the Nigerian production output is definitely challenged. We were down 350,000 barrels per day, which is definitely affecting our earnings from crude oil. We also look at, as pointed about the foreign inflows as well. Your FDIs are down by about 10% from last year. We also see your FPIs as well down by about 68% from last year. So when you look at all of this, you know, the likelihood of an improvement in the near to medium term seems a bit bleak. So I think, yes, it's definitely a worrying trend for the economy.
But then you mentioned the crude oil, price of crude oil on the international market. You also talked about coronavirus pandemic. But then don't you think those are part of the things the handlers of the Foreign Reserve should have preempted and found a way around to actually cushion the effect before we get to this particular red zone?
I mean, I think, you know, the reserves have always been pressured. I mean, everybody had faced this challenge. Nobody expected what was going to happen with the COVID-19 pandemic. And I think if you look at globally, a lot of countries have faced a lot of challenges in terms of, you know, earnings and the economy. And I think Nigeria hasn't been left out as well. So definitely we are. You know, if you look at we're an import-dependent country, and that, if you look at that, and your earnings have definitely, your revenues have definitely been hit hard because of the coronavirus pandemic, and you're also not seeing those FDIs come in and those FPIs come in as they usually would. So that would definitely continue to impact on your external reserves negatively.
All right, let's quickly take a look at the liquid form also, which also fell by an excess of $33.3 billion to $33.2 billion within 3 days, also leading the country to a shortfall of $100 billion. Now, invariably, both the external reserves and foreign liquidity are facing historical depletion. Now, can we safely say that we are running at a loss?
Yeah, I mean, I think you should definitely, if you look at some factors, as I pointed, the external reserve, like I said, will definitely continue to remain pressured in the near to medium term. When you look at what the COVID-19 pandemic has done to the global economy, you can see what has been happening globally, how economies have been steadily supporting their economy thus far. And obviously, Nigeria hasn't been left out. We may not have the same ammunition that some of these developed nations have, but those things are definitely going to continue to play a part. I mean, if you look at some of the major pressures, like I said, Nigeria is an import-dependent country. Even despite the whole COVID-19 pandemic, we saw that imports still grew by about 56%. And obviously, when you look at year on year, and when you look at that, you know, that definitely doesn't bode well for your country, especially when you see that your reserves are on the decline, and they will definitely continue to be on the decline if you continue to see that. You know, while we have to also look at how we've been struggling with the FX backlogs that you know that are still there, roughly about $2 billion as well. So these are all the things that the CBN are definitely battling with and trying to work their way around, and there's definitely continued downward pressure on the external reserves. You know, you have to continue to look at it and see that, and CBN will definitely have to continue to sustain these interventions as well to sort of keep Naira at a decent level as well.
Well, we get to talk about the power of the Naira as of now and what CBN is doing in order to manage the situation. But then let's quickly touch on the month-on-month gross liquid reserves, which have actually been lost by an average of $0.8 billion. And the gross figure now, which comprises invested and liquid proportions, depreciated by $0.85 billion, while the liquid form lost $0.77 billion, according to statistics. Now, what does these now say about our economy? You also mentioned the value of the Naira. Now, what does this portend for the value of the Naira and our economy in total?
I mean, again, when you look at the economy, I mean, there's definitely challenges, no doubt. There's no way, everybody has faced it. And of course, some countries more than some. However, we've seen some slight positive indicators that has come about. So Q4 last year, towards the end, GDP figures seem to we're out of the recession now. Obviously, very sluggish. And if you look at the Q1 GDP numbers as well, we see that we're also continuing in that positive trend, though very sluggish, but I think it's still something to note that, that is positive as well. And if you look at our inflation, you see that it has moderated after a 19-month consecutive increase as well. However, I think the major struggle here has been the FX situation, and as we continue to, it's not that the COVID-19 induced disruption hasn't left us. You look at our oil revenues have been hit badly. We also look at our foreign inflows, as I alluded to in the previous points I made. Those are also been hit badly. If you look at the naira, we saw that last year the naira was devalued by about 26% in 2020. And already this year we're already seeing an 8% devaluation already. If you continue to also see the large spread between the parallel market and the official rate as well, there's still a huge gap, and that continues to tell you how much pressure is still on the naira. I mean, the question here for me is just to you wonder how long the central bank can keep intervening, despite the decline that we're seeing in our external reserves, or are they going to look to devalue the naira sometime this year before the year runs out? So those are questions that still remains to be seen.
All right, we'll drink a cup of water or a glass of water, as the case may be, on that. We'll get back to you, Taiwo. Well, of course, we've been taking a look at Nigeria's foreign reserves, the depletion, which is quite huge. Well, we also get to look at what does it say in terms of the potential foreign investors that are hoping to come into the country and invest when we have the sort of issues we could actually not be encouraging, as it were. Well, it's still Business Edge. You stay with us. When we return, we get to look at these issues and, of course, what the CBN can do to ensure that this situation is managed effectively. Do stay with us. Well, you're still on to Business Edge, and of course, we've been taking a look at Nigeria's loss of about $100 million in 3 days of its foreign reserve. And we have been speaking with the head Brokerage Services Security Trader at Comercio Partners, that is Taiwo Adams. We've been taking a look at the advantages, disadvantages, what can be done, and all whatnots as regards the situations around the Forex reserve. Okay, now let me go back to Taiwo. So, let's take it from the angle of the foreign investors now. Now, where does it leave? Let's even start with the Forex inflow that you mentioned earlier. Where does it leave the Forex inflow? And of course, the potential foreign investors who regard a healthy foreign reserve of a country before they think about investing in that country. Where does this leave these two factors or players?
I mean, there's definitely cause for concern when it comes to foreign investors. As you rightfully pointed out in your question, the foreign investors consider a healthy external reserve before making a decision to invest in a country. And in the case of Nigeria, we're definitely faced with, many other challenges, and that continues to remain a cause for concern for foreign investors. I mean, if you look at some of the situations that we've been facing in terms of insecurity, policy uncertainty, lack of transparency when it comes to the FX front as well. I think all the challenges, obviously, when you add the COVID-19 induced disruption as well, and so on, those definitely doesn't bode well for Nigerian economy and investor sentiments and confidence as well. So if you look at it since last year, we have seen foreign inflows drop significantly with the FDIs declining by about 10%, and then the FPIs as well declining by about 68%. If you look at the likes of Ghana, who's just right next to us, they seem to be getting a lot more of the interest from foreign investors. They recorded a higher inflow in 2020 of about 2.7 billion of FDIs. Obviously, if you look at the favorable, I think this can be attributed to some of the favorable and stable policies that Ghana sort of provides as well. I think for Nigeria, the concern heightened given the FX liquidity, and then you also continue to look at the depleting external reserves. This would definitely not, bode well for Nigeria in terms of foreign investors that are looking to come into this space as well. So that's pretty much.
All right, now let's stay with Forex a bit. We know that the CBN, that's the Central Bank of Nigeria, has the power to determine the value of the Naira and influence imports. Now, with this sort of depletion in the foreign reserves, do you think they still wield that authority? Do you think they still have the power to hold forth the value of the Naira and influence of imports?
I mean, you're right. I mean, the CBN definitely holds the power to determine the value of Naira, but I mean, it's very clear, and we can see that, despite all the, the efforts that have been made by the CBN, we're still at where we are right now. So I would say that the power is definitely diminishing. Again, if you look at, you need a healthy reserve, external reserve, to be able to control or determine the value of your currency. I mean, if you look at it on the import side, despite all those efforts that have been made by the CBN, they have banned 42 import items, from being able to access FX from central bank. And then you still see that the Naira still remain pressured, and you see that despite all these restrictions, we still see increase in imports. Like I pointed out earlier, we had imports increased by 56% despite the pandemic. So this obviously, all of these things continue to raise alarm and cause, remains to be a cause for concern for Nigeria and the CBN as well. The CBN has definitely put forth, a lot of its ammunition in the bid to defend Naira, and we're still at where we are at today. So definitely, I would say that the power is definitely diminishing. However, I think it's imperative handshake between the fiscal and the monetary authority. Would definitely go a long way. When you look at the country's borrowing plan for the year, we still expect to have an Eurobond issuance this year. I think that would sort of help to support or create some sort of ammunition for the external reserves, and that could help the CBN in the short to medium term.
Taiwo, if I get you correctly, are you saying, or are you supporting the borrowing now, Nigerian government going ahead to borrow in order to shore up investments and take care of the government? Is that what you're saying?
I mean, for me, the country is definitely in need of, they have a huge shortfall. Revenue has been tackled for quite some time now, and I think one of the other ways, I mean, the best ways to sort of go about it would be looking to borrow. I mean, if the borrowing is going into the right direction, I think I'm not against it. Of course, definitely has to be watched, because we're definitely seeing an alarming, rate of borrowing. But I think, if that Eurobond issuance comes about, it will definitely help to support the reserves and give CBN some sort of ammunition to be able to tackle some of these issues around the Naira.
All right, now, there's no way we exhaust this topic without talking about NAFEX. I'm glad that you're also an expert in these sort of discussions. Now, economic experts say that the Naira has become increasingly more volatile. Well, you also echoed something of the sort. That was since the CBN adopted the Nigerian Autonomous Foreign Exchange Window for official transactions. Now, they also regard this as a factor for the dwindling fortunes of the reserve. Now, do you agree with the same school of thought?
I know. I think I beg to differ there. I think I share a different thought on this. I think it has actually helped to bring about some sort of stability and transparency to the FX market. I mean, if you look at since the inception of this window, we saw Naira stabilize for quite some time. But I mean, if you look at it, the major challenge that we are facing here is revenue, and then obviously, which was even further challenged by the wake of the COVID-19 pandemic. I think we can't look past that. We have to continue to understand that yes, Nigeria is challenged with revenue, and then you now add the COVID-19 pandemic to it, which also further help to depress some of these challenges that we had as well. So.
Okay, so finally, Taiwo, moving forward now, what do you think government can do differently? What do you think the Central Bank of Nigeria should also do differently to shore up the reserves and balance the books?
I think if you look at something that we can do, a quick win would be, like I alluded to, obviously the Eurobond issuance. The Eurobond issuance, we were expecting it to happen in H1 of this year, but that hasn't happened. We're anticipating that will happen in the second half of the year. But I think that, if that happens, like I said, would provide some sort of buffer for the external reserve or for CBN to be able to sort of manage the pressure that they're facing with the Naira. But I think that will be short. That will be something that will just be short-lived. But I think we need to start looking, for a lasting solution. I think a very solid handshake between the monetary and physical authorities will go a long way. We're experiencing a lot of insecurity risk right now that needs to be addressed. No investor wants to come into a country that is not safe or doesn't feel that the economic environment favors them as well. I think those are the kind of things that we need to look at. And also, we need to look at some more stable policies as well around the FX. And also, if you look at the power sector, I talked about imports being up by 56%. I think if you're able to develop that power sector and generate your manufacturing, develop your manufacturing sector, you sort of have, start to move towards an exporting country as opposed to an import-dependent country. And I think that would definitely go a long way in solving the FX issues going forward.
$100 million in Nigeria's foreign exchange shortfall, Nigeria's foreign reserve, rather, a shortfall in the foreign reserve. Now, Taiwo Adams is saying that what we need are lasting solutions to be able to tackle this particular issue. Well, thank you so much, Taiwo, who is the head Brokerage Services and Securities Trader at Comercio Partners. Thank you so much for being so resourceful on the program.
Thank you very much for having me. Have a good day.
All right, so we will take a break now to bring you NC4 to watch. Do stay with us. NC4 to watch. Seychelles, food prices in Seychelles has risen by 19%, while non-food commodities are up by 10.5% in figures released by the country's Central Bank of Nigeria in May 2021 as compared to a year ago. The governor of the Central Bank of Seychelles, Caroline Abel, told the press conference that although most of the commodities are imported, there's also local dynamics and foreign exchange, which is one of them. Now, moving on now, the African Development Bank has announced that it has granted $665,000 to support the rehabilitation of the Machipanda Railway, which runs between the Mozambican port of Beirut and, of course, the border with Zimbabwe. Now, the grant, which comes from the new Partnership for Africa's Development Infrastructure Project Preparation Facility Special Fund, will fund the environmental and social impact assessment studies to ensure that the project takes into consideration resilience and sustainability. Now, South Africa's commercial activities rose above expectations in May as the country recorded the largest monthly trade surplus ever on the rise in exports. The SA Revenue Service, SARS as it is called, says South Africa's trade surplus rose to 54.60 billion rands in May from an upwardly revised 51.26 billion in April. The trade balance has remained firmly in the surplus to trade and to date, recording 51.2 billion rands in April, marginally narrower than the 52.6 billion rands surplus for March. Now, Kenya Deposits Insurance Corporation is implementing the risk-based premium assessments for banks effectively from midnight, July 1, 2021. This will cause commercial banks to pay additional premiums to the Deposit Authority in the new model based on their risk perception. The new risk-based premium assessment incorporates the standard flat rate of 0.15% of deposits held by each lender, plus an additional factor based on the new risk model. Well, that's it on Business Edge. You can follow us on social media. We are at News Central TV. You can head to our website, www.ncentral.africa, and of course, download our mobile app on Play Store and see you next time. I am Lekan Onabanjo.